Nigeria's Honorable Minister of Finance and Coordinating Minister of the Economy, Wale Edun, has officially launched the Series 1 $500 million domestic federal government of Nigeria US dollar bond. This, of course, took place yesterday, and it was aimed at raising at least a minimum of $500 million from both local and international investors, marking a significant step in Nigeria's ongoing economic reforms and development efforts. The bond issuance, which is set to leverage the Nigerian financial system, including Securities and Exchange Commission, the banking system, investment bankers, represents a critical effort to attract foreign currency held by Nigerians abroad, as well as other international investors who believe in the macroeconomic reform initiatives spearheaded by President Bola Ahmed Tinubu. For more, we're joined by David Shaibu, who is an emerging markets fixed income currency trader at Zedcrest Capital. David, good morning to you. Thank you so much for joining us. Lots to discuss here on this bond. I also want to get into inflation if we have the time. But what do you make of it? What do you make of what you saw yesterday, the launch and some of the details of this offering?
Okay, I think it was an interesting one, or it is an interesting one, given the fact that this is the first series of issuance we'll see of a dollar bond, a locally traded dollar bond. And it will go a long way in helping to fund this year's budget deficit and also create room for FX inflows into the system.
Now, we have a Euro bond market with much larger investors out there, right? There's also the discussion around, could you have gotten more from a Eurobond, which we've raised in the past, $1 billion, 2.5, 3, and so on and so forth. With respect to whether or not we should have gone ahead with launching this ahead of just going to the Eurobond markets, which domestic investors should be able to have access to as well, if you want to give them that. What do you make of that dynamic?
Okay, I mean, that is quite dicey because for the Eurobond play, right, the minimum investment size is up to $200,000, and most retail individuals cannot participate in that, just given the barrier to entry, right? So given that, right, the majority of investors who bid on the Eurobond markets are sophisticated international investors, and they are well aware of the dynamics, the macroeconomic environment, and the risk conditions of Nigeria, right? And we expect that the pricing would definitely be way higher than whatever the domestic dollar bond will close at, because they're well aware of the rising debt service to revenue ratio, debt service to GDP ratios, and whatnot. So I think it's a good one on the part of the government, because they can actually raise some sort of dollar proceeds domestically at really interesting levels.
Speaking of those levels, the benchmark is the Eurobond, is it not?
Yes.
So anyway, look, I get you. That sounds fine. This came via an executive order, right? And the Minister of Finance, he did speak a lot about this. Where Arise News was with him in Davos when he talked about this. At the World Economic Forum, we covered the business meeting that they had with international investors. It wasn't open to the media, so there were no cameras there, but were witnesses there. And he's been talking about this executive order. In terms of the Ministry of Finance, the Debt Management Office, and so on, do you need an executive order to be able to assess your borrowing needs and then decide whether or not when you want to raise debt?
Okay, as to the issue of the executive order, I think that is well in place, right? Because going by the definition of the fiscal policies and monetary policies, right? Anything fiscal related is actually supposed to reside in the arms of the executive, right? And so through the Ministry of Finance and the executive arm of government, and that's the presidency is actually saying that we want to actually do this. This is a first issuance, and that's why it's coming directly from, the presidency itself through the Ministry of Finance, right? It's not in the place of the central bank to raise debt for the government, right? The central bank's key mandate is to maintain price stability, that's inflation, and also to ensure full employment, that's economic growth.
Look into your crystal ball. What do you think, what kind of subscription? The auction is on Monday, right? So what do you think in terms of, Basically, it's oversubscribed or it's under or oversubscribed. You think there's enough appetite out there to snap this up?
Oh, yes, of course. The primary targets are the Nigerians in diaspora, right? But, local Nigerians that are, residing in the country can also participate. And also institutions, right, within the country can also participate, right? So given that wide bucket, right, of participants, we expect an oversubscription, really. They are willing to raise up to 2 billion in this Series 1 of the bond offer, right? But the amount on offer at this auction is just $500 million, right? And I expect to see at least double of that in terms of subscription. And depending on where they bid, right, that's market players bid, right, that will go a long way in determining the rate. But I expect it to, trail what the 5-year Eurobond is actually doing, which is somewhere around 10% as well.
Okay, yeah, we'll see what those results are like, I guess, late Monday, early Tuesday.
No, it's supposed to run for up to 10 days, so it's not going to close immediately.
Until the following upper week then?
Yes.
Gotcha,
Yes.
Thank you.
Yes.
The inflation figures, the latest inflation numbers, for a number of folks have talked about this peak and then getting into a deceleration. So yeah, we have the numbers up. Can we say it was base effects that triggered this? What do you make of the latest figures we've seen from Nigeria?
Okay, really, yes. Base effects contributed significantly to the moderation we saw in inflation. When this administration came in May last year, the following month, we did see them introduce a twin policy, which was centered around removal of petrol subsidies and also for the unification of the FX window, right? Those two things significantly jacked inflation from about 22% levels to even up to 25%, right? Starting from July, August, right? So that is a strong base, right? The increase we saw July of 2024 is actually still an increase, but nothing compared to that huge base effect, right? But I wouldn't entirely attribute it to base effect, right? Because the government is also putting in place some certain policies to actually bring down inflation or to combat inflation. For instance, what's it called? We saw the recent introduction of the 180-day suspension on import duties on food,
right. Yep.
And also VAT on some certain food items, right? That is a strong policy which I think has trickled into this last month's inflation. That policy was done last month, and we started to see the effect gradually tickle into the inflation figures. We also saw them import about 250,000 metric ton of wheat and also other staples, right? So that has significantly wrapped up food supply and going a long way in bringing the inflation figures.
Yeah. Now, I want to ask you if we will see a deceleration trend. And we were talking about this. We had a guest on from Accra yesterday. We're talking about, because Ghana released their inflation numbers on Monday or so. And so if you look, if we put up headline inflation and food for Nigeria and Ghana, you can see the deceleration trend for Ghana. So, are we looking into 2025 and beyond to see a sustained, or even starting from this point going down towards the end of the year, a sustained deceleration trend for Nigeria, the likes of which Ghana has experienced?
Yeah, it's very likely that from this point onward, we continue to see moderation in inflation, given the impact the policies of the government are having on food inflation, particularly because that is a significant driver of inflation, really, right? So, barring any other policy change, any other shock like the electricity tariffs, right? We are all aware that Band A customers have witnessed over a 200% increase in tariffs, right? If before the end of the year, most of the nation is moved to that Band A category, then there could be another temporary glitch or rise in inflation. But other than that, if central bank continues to monitor the foreign exchange part and significantly pumping dollars into the economy, and dollar is contained at, below 1.5 levels, right? Yeah. And food, they continue to make efforts to continue to make sure that there's abundant supply of food and combating insecurity in the north and whatnot. Then from here onward, I think that inflation should actually moderate.
Great. What does that now mean for the Monetary Policy Committee? So the next meeting and the meeting after that, do we then see, maybe we can quickly start talking about rate cuts already. Do we at least see a hold? How do you see the MPC if this follows through and we see inflation decelerate? Yeah, what's happening?
Yeah, I see definitely a hold, right? Because yes, the government has made progress in combating inflation, as we've seen in just this recent drop from 34.19 to 33.4%. But I don't think that is sufficient enough for them to say they want to cut the rate, right? Because we've had 18 months of increases, right? And this is just 1 month of respite. So they want to monitor things, see how, the hawkish stance of the central bank is actually impacting the money supply figures and also trickling down into inflation figures and whatnot, right? I also think that because they are also issuing this dollar bond, right, it's going to actually help in terms of combating or reducing really the need for local domestic borrowings, right? And once you decrease your local domestic borrowings, right, naturally the secondary markets or market players will start to price in lower interest rates because that's a shortage of supply, right?
Yeah.
And so that can help to moderate interest rates temporarily, and we even see that come into play even before Monday's bond auction. There's a local bond auction as well on Monday, right? So I don't think the MPC should rush into a cut, right? The markets will definitely start to adjust and reflect some of these positive news we've seen in the economy and give them time to monitor the data and eventually make the decision to start bringing rates down.
Great stuff. David Shaibu, Zedcrest, thank you so much for joining us. Really appreciate your time. I really appreciate it.